say Pharma, he gets alert, and when I say Pharma stocks at a 52-week high, he will have a big smile on his face. That's Ravi Dharamshi. He's been advocating, arguing on various forums that a bull market in Pharma has started. Ravi, as of now, it appears that your thesis that a bull market in Pharma has started is right. But do you think now it is time to understand that not every pharma stock will go higher? Very few pharma companies in India are making hydrochloroquine, and there are some pharma companies where we know that US FDA problems are here and they are real. As of now, it's a rising tide phenomenon, Ravi. Just about everything which has got a prefix pharma or a suffix pharma has gone up. But that's not how things should ideally move.
Yeah, hi Nikunj, good morning. Good morning to all your viewers. But first let me dispel a myth that the current pharma rally is driven by HCQS opportunity per se. Let me just give you a little bit of context. See, pharma had peaked out in 2015, no doubt about it. We had a peak opportunity in terms of drugs going off patent. The 10 lakh crores approximately market cap of pharma in India corrected all the way to lower than 3 lakh crores. The weightage in Nifty went from 8 to 10% to less than 2%. The pharma companies had concentration in terms of products contributing to the profits. That corrected itself over the next 4-5 years. Then US channel consolidation was exerting tremendous amount of pressure on the pricing in US on the generics. And add to that, there were other issues like US FDA, companies facing US FDA and drug approval issues. So those were the factors why pharma had corrected. And honestly, the extraordinary profits are out of the numbers now. And on that base earnings, the multiples that these companies were getting was really low. The domestic market was anyway doing well. And since a year or so, the generic price deflation has also eased. Now add to that rupee started depreciating, and also the fact that probably we have a better role to play in the global pharma supply chain. Also, there was real disdain for the Indian pharma. The perception had been created because of the books like Bottle of Lies that these companies are not ethical and they don't, they are not adding value in the right way. But that was, in my opinion, an exaggeration of a historical past and anecdotal limited to few companies rather than painting the entire industry with the same brush. So all these things are getting corrected. The perception is getting corrected, the low weightage is getting corrected, and the low market cap is getting corrected. And there is a possibility that this particular crisis might lend itself, India might get an opportunity to play a bigger role in the generic industry.
When we speak to market experts like you, all of them have a uniform chorus when they say stick to large caps, small companies will not survive. If it's a bank, buy HDFC Bank. It's an FMCG company, buy a Britannia or an HUL. Will the same logic apply with pharma, that if you want to invest in pharma companies, buy the top 4, don't go beyond that?
No, I don't think so. The opportunity in pharma is actually far more diverse, and there is an opportunity for a smaller company also to get big. It is not a winner-take-all kind of a category. You can come in, be the best in your category in the niche you create, and if you provide the best product at the lowest possible price, then you have a chance to succeed as well. However, I would still treat a small company becoming a large company as an exception rather than a rule, because if you haven't scaled up your business, the opportunity in US, it was there for the taking for the past 20 years. If you have not captured it till now, what makes you eligible to capture it now? So the larger companies do have their product portfolio, do have their supply chain, do have their marketing network in place, and they have the cash flows and balance sheet to grow larger. But that does not mean a small company cannot create its own niche and grow. So mid-sized companies can definitely become big in pharma space.
Pharma, Ravi, is not an easy sector. You got injectable companies like Aurobindo Pharma. You got contract research companies like Divi's. You got R&D focused companies like Sun Pharma. Then you got Cipla somewhere in middle, which is a semi-regulated plus a company which largely is big in generic. Where do you think the opportunity size and the earning cycle is the strongest?
So clearly, the domestic pharma actually had been doing well, and they were priced also that way. It's not like there was a big difference between the price and the value in domestic pharma. So the delta clearly has come from the US generic market. Now, US generic market, I would slice it in terms of which are the protected profit pools left to be still tapped. So biosimilars, inhalers, injectables, specialty complex molecules. These are the four major profit pools where Indian generics can still go and make a meaningful dent, and it can make a meaningful dent on their profitability as well. So companies, see, the thing is in pharma, you have to invest with the next 5-7 years point of view. So companies that have been trying to change their model or adjust from 2015-16 are the ones that will now be positioned to capture that opportunity. And the beauty of this sector is that every company is uniquely positioned. Somebody is focused on inhaler, somebody is focused on injectable, somebody is a pure manufacturing play. Even those kind of models can do well. So yeah, I mean, opportunity is there for everybody to take.
Are you happy to buy the pharma stocks which you own for next couple of years, or have you bought them for a trade? Are they part of your trading portfolio, or are they part of your buy and hold and forget 3-year kind of in portfolio?
First of all, I don't have any trading portfolio. I only manage client funds, and we have our highest weightage in terms of sector is pharmaceutical at this point of time. And I would be happy to buy. So this rally that started out as a underweight correction is developing new legs as it goes in terms of new approvals, in terms of plant clearances. So at this point of time, it is still, as you rightly mentioned earlier, is a rising tide and everybody is getting benefited. It's still the underweight correction that is going on. At some point, this particular rally will peter out, and then we'll have to focus on the individual company's strength in terms of pipeline and portfolio, and whether that has the leg to take it forward. So I would be happy to buy, maybe not right now because the run has been too fast and quite a lot, but any opportunity, either price-wise or in terms of new data point emerging in terms of positivity, I would be willing to look at this sector for sure.
When I say trading portfolio, Ravi, what I meant is that have you bought these pharma stocks for a 50, 60, 70% pop, or have you bought them part of what could be called as the classic compounders?
So, see, pharma that way is not a classic compounder. It does have a little bit of its cyclicality, and the source of profit is concentrated, will always remain concentrated. One particular drug can give a big amount of profitability boost, and the return ratios are not comparable with the FMCG. So they are more in the 15-20% range rather than 30 to 40% range that FMCG has. So, but having said that, there have been tremendous wealth creators in the past. I remember this entire sector being available at around 50,000 crore market cap in 2001 or 2, and it went all the way till 10 lakh crores in the next 15 years. So it has been a tremendous wealth creator. A particular company can be a compounder and a wealth creator, but it has its own nuances. It is not as less volatile like FMCG. It is volatile.
If you get fresh allocations right now, would you buy pharma stocks, the ones which you like as we speak, or you'll wait for a bad day, a 10%, 15% decline?
As I said earlier, I will either wait for a better entry point or on any new positive development.
Okay. You said that Pharma is your large holding and largest holding. Now, Pharma's weightage on the index is what, about 4% or 5%? I'm not looked at the latest one. Isn't that a risk? I mean, most of the fund managers we speak to, they are overweight financials. And if you are overweight Pharma, I would imagine that that must be more than 20% of your holding. I mean, you're really taking a differentiated approach.
Very concentrated portfolio strategy. So by default, if I have at least 2 or 3 bets in the sector, we will by default become overweight in the sector. So we do not follow very stringent weightings according to the index. Our still remains bottom-up picking, bottom-up stories, rather than it being a pharma sector call. We like the story. We have certain biases because of the way it's created wealth for us in the past. But honestly, I'm not weighting myself to the pharma index. To answer, say in terms of weight, I think it went all the way to below 2% from 10%, and now it has corrected to 3.5%. So I think we are nowhere near euphoria or peaking out in terms of pharma opportunity. So all that is not a point of worry at all for me.
Is there merit in assuming that Indian companies currently are making hydrochlorine and some of the Indian companies are also developing vaccine? Is that the trigger point which you are also contemplating could be a moment of re-rating for pharma?
No, I don't think HCQS per se or azithromycin or remdesivir or any of the vaccine, that's the gold rush where the whole world is going towards. I don't think that is the reason why pharma stocks are rallying. I would say their future looked very dark for a few months back, and that dark shade has lightened up a little bit, and the perception has improved a little bit that Indian pharma can play an important role, an indispensable role in the global pharma supply chain. And that is what is driving the stocks and not HCQS. I don't think anybody is going to make any meaningful money out of this COVID opportunity.
What is your view on MNC pharma? I mean, we all know that Indians will now consume better medicines for immunity. Better medicines are going to be consumed by all of us in order to protect ourselves and keep ourselves safe. Do you think there is money to be made in the Glaxos, Abbotts and the Novartises of the world?
I think just like I explained to you how opportunity unfolded for generics, Indian market 5 years back, there was a threat that Indian market will go the generic way. That has not happened. Indian market has remained branded generic. And also one more thing that changed is some few MNC parents decided to focus on India as a market where the time gap between the launch of new products in the developed market and regulated market versus India crunched down to under a year. So that shows you the commitment. So with MNC farmers, you are always worried about whether your interests are aligned with them or no, because they have other listed, unlisted subsidiaries. So once that became clear and market identified that these are the players that where our interests are aligned, where the pipeline is good and they are being launched consistently in India. India is one of the few branded generic market left in the world where you can make FMCG kind of return ratios. So definitely MNC pharmas, or rather domestic pharma, is getting today the multiples closer to FMCG than to the US generic pharma.
Okay. What else apart from pharma, Ravi, has been on your radar?
No, so specialty chemicals, agrochemicals, some of the other non-essential FMCG companies, we've been focusing on them. Financials is one where we have actually gone a little underweight after the recent crisis unfolded. I think right now we are not very much in the clear which sectors are going to benefit. We are right now choosing to stay with the sectors that are likely to be least impacted from this particular crisis.
Okay. What is your understanding on how specialty chemical supply chain would move because of sell-off in crude? I mean, directly, indirectly, specialty chemicals are dependent on crude derivatives.
So the shift had already started happening pre-COVID-19 because of the pollution issues in China and unreliability of China as a main source of supply. Everybody wanted a second source, and India was nicely falling into fitting that jigsaw puzzle. And I think this particular crisis will only accelerate that. Of course, there are some supply chain issues and some logistics issues which are going to impact the numbers in the short run. But from strengthening the business model point of view, with a next 3 to 5 year, 10-year point of view, I think specialty chemicals are getting more and more into the sweet spot.
No, but I'm just trying to understand that, let's say if you look at any chemical company which was dependent on crude, now that raw material prices have been rebooted, obviously the selling and final product prices will also get reset. Now, no, you don't, I mean, nobody has done a calculation in the world that how will world move if crude stays at $10. So what happens to specialty chemical companies in terms of margins, return on equity, inventory losses, selling products, raw material requirement? Have you done some numbers on that?
So I don't have often numbers with me, but it's a very good question, and I'll answer it a little more in a generic way. That so crude is a pass-through for them, and as long as the company that you're invested in is not a commodity company, then large part of your top line is also unlikely to be impacted. But these companies make margins in terms of rupees per kilo, and not in terms of 20% or something. So even though optically the margins might, top line and margins both might take a hit, actually their absolute profitability is not going to be impacted. So crude going down, if it's a really specialty company, should be a very small proportion of its cost, and value added should be much higher. But some commodity chemical companies can get impacted on the top line as well as on the EBITDA.
Closing comments, Ravi. I mean, the whole digitalization of the economy, embracement of automation, I think is real. It's here to stay. It will only increase. Every company we speak to, they are using terminologies like automation, cost cutting, and digital embracement. This is a multi-trillion-dollar opportunity which is staring at everyone's face. As a fund manager, how are you proposing one should invest in it?
Unfortunately, most of the innovation of the business model is happening outside the listed space, and we do not have a play in those companies. Some of the good companies like maybe Zoho or some of the data analytics company, and I'm taking names of unlisted companies over here, so are outside the purview of the stock markets. And unfortunately, there is not much way to create wealth over here yet in the stock markets. But whatever the few that have gotten listed are showing promise, and one should definitely be, whether it's a mobile marketing company or whether it's a ticketing company, one should be looking to accumulate these, because this COVID-19 crisis is only going to accelerate the process of technology adoption, and we have seen that they are the least impacted even during this crisis. So a plethora of opportunities opens up for them. People are moving from being food delivery to delivery of anything. Pizza company is getting into delivery business. So there are lots of cross-selling opportunities, opportunity to expand your business model and leverage on the technology platform that you have built. And the marquee deal that has been announced today is actually a testament to the fact that Indian market holds tremendous potential. So I remember a few years back when Facebook acquired WhatsApp, we were all appalled at the kind of valuation that had been paid for an organization with 40 people, zero revenues. $19 billion. Looking in hindsight, that was probably one of the best acquisition ever in technology space, and it has created tremendous wealth for Facebook, and it enabled them to move from desktop to mobile. And similarly, this particular deal will help them to enter into India, which is the largest market, maybe not value terms, but for sure in terms of volume. And China remains a closed market for most of these American companies. So definitely there is attractiveness in Indian market, and we will also have hopefully opportunity to participate in this wealth creation.
All right, Ravi, appreciate your time. Glad you could join us. Stay safe, and thank you for your valuable thoughts. We'll take a break.